Hello, everyone watching. Before we begin, a very important disclaimer that none of the statements we make during this call is investment advice in any kind. The only advisory role we provide is through our investment products, so do check them out at Wealth Desk in small case. Okay, so today's topic being the insurance industry and who's seemingly going to be on the top or who is at the top at the moment. So, any of you know? So, I think Yash is our in house insurance expert, considering the amount of modeling and insurance research he's done for us. So, would you like to just give us a brief on what's happening in the industry right now?
Mm, I think we all heard about insurance changing mostly through the budget. They bought the tax relief that insurance used to get is not as good as it used to be. So there's a lot of problems there. But overall, the insurance industry as a whole is very promising with the growth because insurance market is very underpenetrated in India. So yeah, I think we can discuss a few of the private and public players and see what's brewing in the market.
But the underpenetration is quite a myth. Like, so in terms of policy, there is policy selling or how many people are insured, there is underpenetration established. In terms of how much people live versus how much they're insured for, there is a gap and that is also established. So underpenetration there as well. But in terms of insurance, as a composition of the total savings that Indian households have, it forms 20%, which is not under penetration, right? Insurance ideally should not even be counted as a savings. I mean, in its typical form, insurance is not a savings product. Insurance is an insurance product. But thanks to all the complicated products we have, 20% of household savings are in the form of insurance policies or premiums parked with an insurance company for a return or money back or annuity or whatever the case may be. So clearly, there's a disconnect between what the product is supposed to be doing and what it's sold for versus what it really is doing and what it is being sold for.
Right.
So I think what that is being addressed with the new budget, that they're kind of patching that loophole where I guess insurance people invested because tax-free returns, but now if you're paying more like 5 lakhs in premiums cumulative in all your insurance premiums, so I think this will incentivize the industry to sell to a breadth of people rather than overselling to one person and making them buy a lot of insurance.
Yeah, but then like I don't like the whole point is you don't even get you can make better returns if you just buy a term insurance policy and pick up like a index fund.
Yeah.
Because okay, there is a long-term tax applicable on index funds, okay, but you're hardly paying any fees, right? It is like 0.5% or lesser. Versus what you're paying for fund management with an insurance company is so opaque. There is a management fee, then there are other costs involved, and you can't even easily get rid of or delink the two products. Transparency is lesser. So clearly, there is a case for like saying, hey, let me just buy a plain simple term insurance policy and on top of that build an investment corpus through something as simple as an ETF or even your existing portfolio, right? Because at the end of it, if you're paying 3x the premium or 4x the premium just to get that premium back at a later point in time, you already have that extra amount of money to invest. So why does it make better use of it?
I
Do any of
think
you all have insurance policies, by the way?
No, I don't.
Yeah, I think I have, but it's a family insurance plan.
वो तो health insurance होगा ना, not life insurance.
Yeah, I think so.
No, because a lot of like people buy insurance for like their kids and stuff also, right? Because it
Right.
has become the ingrained part of saving culture historically.
Yeah, it's just like matlab, LIC policy, you need to have it.
जीवन के साथ भी जीवन के
बात भी
Yeah.
yeah.
But a big reason for that, I think, is every fifth person is selling insurance in India. No money is going out pitching for index funds. There's no knowledge there.
Uh,
So I think that is something that can be tapped into. I guess the
Yeah, no, but
distribution is
those are the
huge.
changes that are happening in the industry, right? Like
Yeah.
the levels of changes are pretty positive in terms of what insurance should actually be and what distributors or agents or whatever should not be doing.
they shouldn't be our relatives for sure, but like
Dude, relatives mis-selling is the biggest chop in your life.
it's so many relatives are selling so many insurance. Like it's a war.
No,
Which one
but
to
they're
buy?
feeding off you because they're selling you like meaningless policies and getting like higher commissions. Like long.
Exactly. They're like that's the whole selling strategy. Like get them to pay the first premium, and then we can see further from there.
Yeah. No, but Ayush, you want to talk about the changes in the industry from the positive directional perspective.
In terms of, let's say, since we're already on the topic of just distribution channels in general, and we speak about LIC and their agents being sort of secret agents within the crowd, where if you pick them out, it's very easy. And that number has almost surpassed a 13 lakh figure, where 95% of all of their premium amounts come from this large and rather aging agency force, and just about 3 to 5% is coming from any sort of banking institution that they're allied with. So that outdated system, which may have been applicable, let's say 5 or even longer than that years ago, is now suddenly switching towards a delinking from the entire agency front and more towards just direct selling or just banking institutions using their digitized mediums towards selling their insurance policies. And I think, for example, um, Sagar, could you just highlight the numbers that we see for HDFC and SBI Life?
Yeah, so no, both HDFC and SBI Life have been doing a great job at leveraging their own banking channel and digital means for selling, right? So while LIC was at what, 95%, right?
Right.
Through agents make up hardly, I don't know, about negligible amounts for both these companies. What they do is about 50% comes from their banking channels,
Right.
and the rest of it comes either through insurance brokers or through digital channels. And the growth in digital has been massive, right? Because you've got now marketplaces or aggregators like people are coming in and easing the entire process out. Um, so there is a marked sort of shift in terms of how policy distribution is happening. And so shift also because what's happening is that LIC is losing share, right? So it is heavily dependent on agents with 95% of their business coming from agents. But LIC is rapidly losing market share to private players who get incremental business from newer channels. So clearly the agency business is kind of outdated at
Dwindling
this
out.
point. People have realized that there is a high amount of mis-selling, or they don't want that pushy interface in any case, right? Someone coming over to your house and constantly pushing you to buy something higher, and there is a clear ulterior motive in terms of commissions earned in terms of what they're selling. So that model is getting outdated rapidly, and private players
Right.
are leveraging on newer modes. But the larger shift also has been in terms of what kind of policies have been sold, right? And I think that is also something that has to do with a mix of education plus awareness plus newer investment products being available. So probably want to talk about those numbers as well, because that also explains a lot of why someone like an LIC, which has been such a large entity in terms of insurance, as well as one of the largest corporations in India at this point, even in terms of holdings they have in the stock exchange. Um, in listed companies, sorry. And that can come off because of ongoing trends, right?
Right.
Just because of the product mix as well.
For example, as you mentioned, LIC's product mix as of, let's say, H1 FY23, there's been barely any movement in their split between par and non-par policies. Now, par is basically participating, which means that the insured individual can claim a stake in the insurance company's profits, and non-par is basically not having that non-guaranteed benefit. So anything in a non-par is guaranteed in your tenure of the policy. Now that split for LIC, for example, has been anywhere between 95 and 5 or 93 and 7, and has barely budged as such. Whereas if you take HDFC Life and SBI Life into consideration, their reliance on the power sector has dwindled so much to the state that SBI Life has only 3% of their new business premiums coming in from the power segment, whereas more than half is coming from their non-power segment, which is a great shift, because I think even from a margin standpoint, the
No, sorry.
non-par,
So
yeah,
basically, you're saying too much power, non-power, but
yeah, yeah,
basically, people want a guaranteed sum back,
right,
uh, is what the trend is, right?
right,
So whatever premiums they invest, so whatever premiums they spend towards buying their policy, insurance policy, plus the premium amount that they spend, which is invested by the insurance company, all they want is either the premium back at the end of the tenure, 30 years, 40 years, whatever the tenure is, or at the end, they want a certain sum assured back, which is
right,
promised return in the beginning. So they don't want an investment product out of it, which says, hey, I'll give you uh, your premiums back plus either 4% or 8% or whatever back. So that ambiguity of or that whole ethos of an investment aspect is not really coming into the picture. That's not what people want. But LIC still seems to be pushing only those products through into the channel.
okay. So now that we've covered just the general industry shift towards how the distribution mix is looking at, where agency model is going out and more of digitized direct selling or through a bank is coming in, and how LIC is yet to catch up in that trend, we can also focus a little bit on how products and that mix within each industry, or sorry, each insurance player is also making a huge transition shift. Now basically how insurance products might be classified are between protection and savings. So protection is just your plain and simple insurance policy, which insures you for a particular amount based on the premiums you pay. But a savings policy has two features. One is the part where it insures you, which is the protection part of the policy, and the other is either a savings or an investment angle, wherein you pay the premiums towards maybe a fund that the insurance company is managing, or just a guaranteed benefit that you get towards the end. Now this transition is shifting towards, now there's a product called ULIPs, that or people call linked policies, that is being phased out, and more of the guaranteed benefit, which provides safety, lack of volatility, or even any form of reliance on the market as such, is coming in. Even protection, as we mentioned, as you had spoken about, just the psychology behind how people buy insurance products, buying insurance for it being insurance is becoming a new trend, and that's a good thing, because protections have are gaining a significant share in the product mix. Like for example, if we talk about HDFC Life or SBI Life, it has gone from, let's say, 5% in FY18 to 24 in the current financial year, which is a great shift, and one of the largest that is seen across each segment.
So finally, insurance companies are selling and people are buying what insurance should actually be.
Yes, finally.
Awesome. But except LIC. LIC is still.
Yeah. So LIC still so there is the par non-par debate that keeps happening
Yeah.
in the insurance industry, wherein par is just participating policy, where the insurer can get a share of the profits that the insurance company makes, and a non-par is, as I mentioned earlier, just a guaranteed fixed benefit that you are aware of when you buy the policy itself. Now LIC split is more of a 95 to 5 or a 93 to 7, and that number has barely budged in the past 5 years, which is something that I think they're trying to break out of the mold, but hasn't happened in a material sense yet.
Yeah, I mean, if all your agents have to start getting lesser commissions,
Yeah,
what is
that's
the
true.
incentive for them to sell something that is one third revenue for them?
In fact, on that
Makes
note,
sense. Yeah.
SBI Life, like if you just take the agency force of LIC and SBI Life, SBI Life's per agent makes more premiums than LIC's does. So that could be either just dilution based on how much volume LIC has, or there's something fundamentally going wrong on their end.
No, so also it must be because I don't know how the numbers calculated, but what if like, so premiums ka commission continues till the time the premiums are paid by the user.
Right.
So it's a beautiful business in terms of if for the first year I sell 100 people a 30-year policy and 30 years ka premium आना तो premium मतलब मेरा revenue is तो going to come, right? So every year I'm just gonna add to my bucket and not
Correct.
see much of a outflow. Uh, so that must be also resulting in a place where uh, people just become a little relaxed over time, right? They're like, yeah, we've worked hard enough and now the revenue stream is steady. We
Right.
don't need to struggle and go out and keep selling new policies all the time. Uh, so that also must be making a difference in terms of the rigor that the aging population of the LIC agents
Right.
have versus the private players or SBI, what their force looks like.
And we're seeing aging because I think more than 50% of their agency force is above the age of what, 50, 40?
60% above 40.
60% above 40, which is a large number.
Yeah. Yep. So far, HDFC and SBI Life are 2 points up on product mix and distribution,
Yeah.
whereas LIC is -2.
Right.
Hmm.
What next? Profitability.
Right.
Uh, in terms of the distribution, I think when we spoke, big advantage that SBI has is, it sells through SBI, the bank, the cross selling that happens. Whereas if an HDFC or a Max Life has to go, they have to partner with another bank or another financial institution, and
HDFC also partners with its own bank.
Yeah.
yeah, it partners with the own bank, but the width is not as much as SBI. So
Sure.
they spend a lot on that as well, where a part of the profit goes to someone else. They're very efficient. That's why it works out for them. But yeah, that is a big reason why SBI has also done well in the past year. The OPEX is very low.
Right. I think it's
So
at around
OPEX, because they're
5%.
own banking channels, they
Yeah.
turn out to be cheaper.
Right.
Yeah, because the guy who's selling who gets, let's say, a high net worth savings account or an FD, they're like, buy an insurance as well. And he gets a little premium. It's not a lot of hard work for him. So, yeah.
Makes sense. So basically, the bank model then works, and obviously, digital sales will also be much cheaper because then there is no middleman.
Yeah.
Of course.
Or
That's what
if
the
there is a
private.
middleman, that's cheaper, right? Like if a Policy Bazaar is charging a certain transaction fee for being the broker, um, that would be much lesser compared to a physical agent actually going to somebody's house and
Absolutely.
selling the policy.
Yeah.
And I think that's one of the initiatives that IRDAI is also coming out with, right? Called the
This is Ayush's
Bima.
favorite point.
Yeah, I really like. It's a nice initiative, I think, and it'll really help out eventually. Called Bima Sugam, which is just a digital online portal that's going to make insurance dematerialized and digitized in every sense of those two words. And 30% of the products that's going to be out there have already been carved out for life insurance, which could be a great opportunity and an open opportunity for either of these three players if LIC is able to make that
Or more.
transition or more
Yeah.
towards the whole digitized format. But HDFC and SBI have already taken that first step of trying to digitize before Bima Sugam comes out this year, so that they're already at the top of their game before LIC can even make a move.
Right. So because of the distribution channel, clearly the private players again are winning this.
Right.
Um, but in terms of product mix, how does the profile margin profile change, and is that in favor of LIC at all?
So I highly doubt that because as of I think FY22, there was a report that came out where they gave like a basic bracket for what kind of margins each of these product segments come out with. So if we take let's say the ULIPs or the unit linked investment products, they're 6 to 10%, whereas a par is 9 to 15, non-par is 25 to 40, which is already a big gap in itself, and then the protection segment is way above 50%. And there itself, as you can see, the LIC product mix is at in a disadvantageous position because of their over reliance on par over non-par, and the reverse when it comes to like an SBI or an HDFC, which automatically affects just their operating expense in general.
Yeah. So then it's private 3 versus LIC 1.
Private 3 versus LIC 1. I think the
Yash has
LIC.
something to say to defend this.
I'm
He's
I
sure
ready.
think
he's brewing.
Come on.
I had something on the previous point with Bima Sugam. I think that will be a major trigger factor in the industry, because most like the biggest problem in insurance is mis-selling, or people don't know what they're buying. Or sometimes what happens is you pay your premium to the, let's say, the distributor, or I don't know, the agent, and then he might not relate, or some problem. But if it's digitized and it's standardized, it's much more transparent, the process, and all of this won't happen. You can have the agents, but there's a record that anybody can check. You can have someone else to consult. So
Right.
that is always a long-term bullish view on the industry because of that.
Yeah. No, but the other factor that I wanted to sort of touch upon on this whole margin point is related to the fact that non-par policies, as per that report that you're talking about, is fetching higher margins. But also something that Yash had brought to our notice in terms of how um, non-par policies can also translate into shareholder returns and
Yeah.
not just better returns for policyholders.
Yeah.
So you want to explain the whole SBI, sorry, LIC issue, not issue, opportunity.
Of
Opportunity.
course, of course. So I like you have all heard the numbers. I think the numbers, the valuation that LIC wanted to IPO 2 years back were way bigger. Then it came down due to COVID. Then the IPO with even the little amount of float that they had was much lower, right? So there we are expecting some amount of profits at least, but LIC didn't show that, like what was coming on the profit and loss. But last quarter and this latest quarter, I think the numbers have been good. The reason for that, what changed is, so with a par policy, as Ayush explained, you get a part of the profits that the insurance company makes, right? So before that, you have to understand LIC was just for the policyholders. There was nobody owning the company as such. The shareholders were just government. I mean, they are not very much worried about getting money as long as they're making a loss for them. But what happens with non-par policy is, let's say, a 8% or a 7%. That's the return they promise, not in terms of, like, you know how it goes. 5 years you deposit 5 lakhs, then you get 25 at the end of it, or something like that. So what happens with non-par is, you have a, basically how much benefit you are going to give them after a certain amount of year. It's defined. So if the market does well, LIC is very conservative with their investment. I have to say, like, most of it is bond, like 20-25% is equity. With that also, it's conservative. Like, that could be debated after what happened in the past few weeks, but it generally plays it very safe. Despite that, it's much, like, it's not that difficult to outperform in an emerging economy like India, 7-8% of return. So what happens is, the excess returns in a par policy go to the policyholders, but with non-par, that's not the case. It goes to the shareholders, and that's what happened 2 quarters back. LIC publicly listed, they're not getting profits. I think the management woke up and they were planning it earlier only, and they realized that these profit which were kept in the non-par account for, like, no reason, but like it's money that is for the shareholders, they just transferred it. So I think they had like a 15-16,000 crore profit that just showed up, and most people thought it was an anomaly, which it was. It was like 2-3 quarters back pay of the non-par profits. As Ayush mentioned, non-par is very small part of their profits, and they are trying to increase it. Despite that, it was such a huge number. And then they said on the earnings call as well, from the next quarter, like from now onwards, basically, all the non-par profits, they'll go to the shareholders. And it happened this quarter as well. I think they posted a consolidated profit of around 8,000 or something. And then a big chunk of it is non-par profits coming home. So this amount, level of profitability, at least we are going to see in the company, which did not happen in the initial quarters. And like, I think one major factor that we derive from anything, like rather than taking anything else, is LIC is not used to being a publicly listed company or being run for profitability. It was being run very differently. So even if they start pushing those levers, getting this basic efficiency in place, I think there's a lot of good for the shareholders in the company.
No, so basically then, just to add a little bit of context, I think so they've got about 11.5 to 12 lakh crore sitting in their non-par fund.
Yeah.
Out of that, they intend to, as per last report, transfer about a sixth of the amount into the shareholders fund. Now a sixth also turns out to be like a 1.8 lakh crore. And 1.8 lakh crore is on a total market cap of 2 lakh crores for LIC right now.
Yeah.
I see your point when you say that this could provide support to the price and as a driver in terms of how the share is currently being valued, um, which is at a really large discount compared to the private players. But at least there is that tailwind in terms of some support from this transfer that can come through. But from a business standpoint, barring this one factor aside, and Ayush, what would you go for? LIC or LIC because it's cheap and you've got this one benefit of shareholders' value increasing, or would you go with private players on the other hand, which are trading at 3 times the valuation of what LIC is trading?
I think just because the valuation multiple is higher doesn't mean it's too expensive to buy in retrospect. Because just as a historical trend, I feel like the private market is really taking over and the numbers speak for themselves. So as of now, if LIC hasn't quote unquote bucked up on their product mix or distribution channel, then future profitability is anyway in question. So we can't bank just on a non-par technicality that they played out in the media.
Hardik, Yash is on one side, Ayush is on one side. Who do you choose?
So Yash is supposed to be the in-house insurance expert.
Acha, you're relying just because the tag exists with you.
No. So I'm really not very aware about how the insurance markets work. So
Wow,
no.
this is cutting, huh? This is not going.
Give us anything, Hardik. Anything works.
How, how am I supposed to know?
Acha, theek hai, no, but chal, I'll rephrase the question for you. If you had to put your own money, allocate some of your own money either towards LIC or towards HDFC and or SBI, choose between either LIC or the private players, where would your money go?
I think Ayush's argument was way more convincing for me, at least. Like, 'cause,
He just showed you the middle
it's-
finger without showing you.
uh, the LIC thing, I don't see it playing out in the long haul.
Yeah.
The private players, yeah, they're working hard and they are,
Gaining share as well. So,
yeah.
but that's where valuations do make a difference, right? And you'll see high valuations also sticking around if there is underlying growth. If
Right.
a certain company is on the right side of the trend and not the opposite side, they are in an expansionary phase in a market with tailwinds. That works out much better than being this whole large giant which people are literally eating out of every single day. Um, so there may be near-term tailwinds in terms of just getting that one-time benefit or a little bit of value or support in terms of stock price because of additional funds coming in or whatever. But as a sustainable business model, it's just not making the cut, right? So probably I mean, I see the point in allocating some amount of money to LIC just because of valuations and stuff like that. But from a long-term perspective, if I had to back a business and make some real serious money, it would be HDFC or SBI, right? But yes, between HDFC and SBI, who would you choose to buy?
I think I agree with despite that the non-par thing is not a technicality and it has not gotten a lot of press, might I say, very ignored the point, nobody noticed it. But LIC is just a value play. I agree with that. And in the long term, we need sustainable player. I think my pick would be SBI Life over SDFC because the scale at which SBI is operating, and it's very difficult to go downstream in these things the new regulation which says you can't sell more to one person, like basically above 5 lakhs, like making it difficult, not that. Plus, going in tier 3 cities, tier 4 cities, like the people who are rich in those cities, they invest in insurance, like insurance is their investment. So looking at those long term growth drivers as more money flows into those areas, I think SBI would be my pick.
Ayush, your pick.
I think I'm a little biased when I say HDFC Life because I've been holding them for a while and praying for a Hail Mary on that holding. But I mean, it happens, it doesn't happen. But I think, especially after this Excite Life acquisition that they've done in the past year, and when it finally comes to fruition, because even that Excite Life product mix is pretty interesting, with the non-par segment being a large part even there. So, being a small company, they've still managed to adapt to industry growing standards. So, that cumulative effort, I think it can at least give a takkar ka fight to SBI Life at some point, and I'm waiting for that point to arrive. So
But
yes,
Ayush
yes,
is always like a safe player. Huh? He'll be like HDFC over anything else.
yeah,
You give a choice of like Kotak Mahindra Bank, Federal Bank, or HDFC, be like HDFC.
yeah. Yes.
I'm going with the safe.
I think Excite also the South India thing, which it will
Yeah,
help them with that.
exactly. That's a different
It is also good.
demographic.
Their acquisition was also
Exide
going
was
more
South Indian.
toward. Sorry?
No, as in they have like a specific percentage of demographic that's targeting a South Indian population for insurance penetration.
Yeah. Plus, I think HDFC also had the rural thing in mind when they acquired Excite.
Yeah, yeah,
Yeah.
and especially it like comes in line with the whole IRDI insurance for all thing. So they're taking that government angle very head on in the past 2 quarters. So I think that's going to come to fruition at some point. But currently, SBI Life is performing better.
I mean, but the government doesn't drive markets, Ayush,
I mean, true.
as much as it tries to.
That is true.
Hardik's pick SBI or HDFC. Life.
You could pick Max as well.
No.
Ah, you can pick Max. You can pick ICICI too.
ICICI
Sorry,
Prudential.
I ignored those.
No, no. I think I personally prefer SBI over like LIC has just been too big and there for too long.
No,
So
no, SBI and HDFC.
Private players.
yeah, private players. I'm just saying that like between SBI and all other private players, SBI has like you know the largest reach and the fastest way to get there. Like
But I don't see why people classify, including SBI, they classify SBI Life Insurance as a private player.
true that it's SBI is a government entity. That is also right.
SBI है ना after all. But
Ah,
we'll leave it there.
I think so. Initially, it was termed that way because of the BNP Paribas stake, but that also doesn't exist anymore, as per my knowledge.
But that is every insurance player has to like ties up with some global player. That doesn't make
Right.
it like. But whatever, take it.
So, in sum, the,
Sorry.
so talking about the overall insurance industry, I think there are a lot of long-term growth drivers here, like Bima Sugam. I don't know if I'm getting the name right. That could be the UPI movement for insurance with the transparency and digitization. Plus, as more and more people get financially literate, they are going to look at insurance not just as an option they were doing, but as an actual insurance option, which is very underpenetrated, as Sagar mentioned. So I think you should take a look at any of these players, may it be a long-term SDFC, SBI, or a value bet like LIC. But there's a lot of money to be made in this industry, which is a lot of times people scared to look at it because you can't understand it with the P ratio. So, get over that fear, take 5-10 minutes, and I think you'll learn a lot. And what else is happening in the market that's new, Hardik?
all right. So talking about new things, I think excited news came by recently. Air India, I think, placed the biggest order in history of Boeing. Around I don't know 200 plus planes they placed an order for.
Boeing नहीं
So
Boeing and Airbus. I don't know. It's a mix.
Boeing and Airbus, both the companies.
I don't know who's won it. Yeah.
So yeah, lots is happening in the airspace. So I guess that's our topic for next time.
So Air India is shooting for the stars, as they say. Let's see, will they crash and burn or will they make it to the moon?
Uh,
Or whether the other players along with it also either keep flying or stop being sexy. Cool. It's a
Cut.
wrap.
And that's a wrap